Imagine this. Back in the 1960s, you could walk into a store and buy a Rolex Daytona for just a few $100s. Today, that same watch could be worth hundreds of thousands, in some cases, even millions. Meanwhile, if you had taken that same money and invested it in the S&P 500, you'd have done well. But you wouldn't be sitting on $1 million timepiece strapped to your wrist. Today, we're exploring how vintage watches have outperformed the stock market, why collectors and investors are piling into this luxury niche, and whether watches might be one of the most surprising alternative investments of our time. The S&P 500 has historically returned about 10% per year on average. $100 invested in the index in 1970 would be worth about $2,000 today. Pretty impressive. But let's compare that to vintage watches. Take the Rolex Daytona, released in the early 1960s. Back then, it retailed for around $200. Today, a standard vintage Daytona can sell for $250,000 or more. That's over a 100,000% increase. And if you had the famous Paul Newman dial version, one of those sold at auction for $17.8 million. That's not just beating the S&P 500, that's obliterating it. Let's look at some other cases. The Rolex Submariner Big Crown from the 1950s. Originally priced at just $150, today, collectors pay anywhere from $150,000 to $300,000. That's a 150,000% gain. The Paul Newman Daytona from the 1960s, bought for about $210. Today, even standard versions of this watch sell for hundreds of thousands. And Paul Newman's personal Daytona? $17.8 million at auction. Then we have more recent numbers. Between 2010 and 2022, the average Rolex Daytona rose from $8,300 to more than $53,000. Prices cooled a little after that, but still hold strong at nearly $38,000 today. And it's not just Rolex. Patek Philippe, Audemars Piguet. Their rare models have seen values triple or even quadruple in just a few years. So, why can a 40-year-old wristwatch sometimes outperform Wall Street? Reason number one, scarcity. Vintage watches aren't being made anymore. Unlike stocks, you can't issue more shares of a 1960s Rolex. The supply is capped, forever. Reason number two, cultural value. Watches aren't just functional, they're cultural symbols. Steve McQueen, Paul Newman, James Bond, all of them wore iconic watches that added mythology and desirability. Reason number three, inflation hedge. Like gold or fine art, luxury watches hold value because they're tangible. Investors use them as a way to store wealth during uncertain times. And reason number four, portability of wealth. You can't carry a house in your pocket, but you can wear $500,000 on your wrist while traveling anywhere in the world. Of course, it's not all upside. The first risk? Counterfeits. The luxury watch market is full of fakes. Knowing authenticity is critical. Second, liquidity. Stocks can be sold instantly. Watches, you might wait weeks or even months to find the right buyer. Third, market cycles. Just like crypto or real estate, hype drives prices. The boom in 2021 saw Rolex and Patek skyrocket, but values cooled in 2022 and 2023. And finally, maintenance. Owning watches isn't free. You need storage, servicing, sometimes even insurance. So, are vintage watches a replacement for the S&P 500? Absolutely not. The stock market is still the backbone of most long-term portfolios. But watches are proving to be a serious alternative asset class. In fact, Knight Frank reported that luxury watches grew by 9% annually over the past decade. That actually outperformed art, wine, and even classic cars. For wealthy investors looking for diversification, or for collectors passionate about horology, watches are not just jewelry. They're a store of value, a hedge, and sometimes the ultimate flex. So let me ask you, if you had $50,000 to invest today, would you put it into the stock market, or would you hunt down a rare Rolex? Drop your thoughts in the comments below. And if you enjoyed this deep dive into alternative investments, make sure you hit that like button, subscribe for more, and check out my video on real estate tokens, where I explain how you can buy part of a skyscraper for just $50.